Market breakdown today is January 27 on a Tuesday. So right now we are looking at gold. So on the previous day we did close bullish on gold, and as you can see, we're constantly making higher highs. You can see how price retest back on this support level. Once it came down to the support level, you can see how price closed bullish, retest one more time, making a fail low of here, and then breaking out, pushing it higher. So just give you a little quick little lesson within this. As you can see, this is why I always tell y'all, you know, just follow structure, right? Because structure is going to tell you the whole entire story. Oh, let me move this out the way. Yeah, structure is going to tell you the whole entire story. So if we just take this right here, and let's say we just draw it out right here, so you can see our price came here, retested here, came here, retested on this, and then came here, retested. Yes, price did not touch back on this, right? But it still made a swing high, retested on this one, made another swing high, then made a retest, and then broke up higher. So if you look at each one, right, on each structure, this is a perfect example of what an uptrend looks like. When price breakout, retest, sometimes price don't come back to the support level like here. It didn't come back to the support level, but what it did though, broke out this high, breaking this high, retesting here. So at this point, on every retest, right, give y'all some gems. On every retest, instead of buying into that retest, and this is the 4-hour time frame, right? So instead of buying into this, what you do is you go straight to like the 5-minute and 1 minute and look for a internal breaking structure. And what that look like, if we go to like the 5-minute, you can see as price retest back into these zones. Hold on, let me draw it back out. We'll go back to the 4-hour. Give you a little quick little mini little lesson while we're going over. But overall, we're bullish still, as you can see clearly. But I decided to, give y'all a quick little lesson while I'm breaking this down. So we can go to something like the 5-minute. Right? Now peep game. On every single breaking structure, right, you can see. So on this one, this is where price never came back to this area here, right? Which is fine. You can still see where price, if we just zoom into this, on each one, you can still see where price came down, was oversold on the R side, price pushed up, choppy, pushed up, made a clear break here. You could have bought right here, stop loss below here, and just took a chance on that. Or, as you can see here, another prime example. So remember I tell y'all, when price break out of the previous side and price coming to the support level, instead of just buying right into that, right, you come to a level like this. Just giving y'all little examples on how y'all can do this stuff, right? See on here, you can see where it didn't fully tap into it, but that's okay. It still came close enough. You see where price came into our buy zone, right? And then what happened? Price made a clear breaking structure within this. Where's that breaking structure? Right here. It was in a nice down momentum. Price came up, retesting this low, and then all of a sudden we made a clear break, and then retest back into the zone. So that zone was this right here, price breaking out right here, and then retesting back overall within this zone right here. And then what happened? Price took off. So you would have bought in around this range right here. Stop off would have been below here. Easy entry. So instead of you just buying into it soon and tap into this level and putting stop loss way below here, right? Now you can just buy right into this breaking structure and put stop loss below here. Now you have a tighter entry with a higher risk reward. So just kind of giving y'all a live example, and as you can see, this is where we currently at. And then here's another example. Like I told y'all, I think I actually told y'all this yesterday, what y'all could have done, how y'all could have caught entries off of this stuff. If you break it down to the 4-hour too, break it all the way down to the 4-hour. Hold on, let me, so I can't even see it. Let's see, whatever. Anyways, but here's another one. When price broke out this swing, this one actually tapped right into it. So you can see here, price broke out of it and gave you a clear. This one kind of sloppy, but here's a clear area right here where price was coming down, broke out of it, and it made a clear. Oh, broke out of it and made a clear break right here, and then price retested back into the zone. So clearly, that high got broken out. Just the low here to the low out, broke out of it, and boom. So you just buy on the pullback. Why? Because that's your confirmation that hey, we broke out of this. We made a swing low, right, and broke this high. So obviously you buy off of that, and you put your stop loss below here, expecting it to not come back. You don't know if it's going to work or not. You just anticipating because that's based off the strategy. Price came into our support level, made a clear breaking structure. Okay, boom. We're going to buy off of that. And then you can see it was choppy. Then right on that opening, price spiked up. And then obviously we just in this little phase right here, the price, started slowly dipping. But even then, you got that right there, right? Here's another one. This is where price retest and came back into when it finally broke above that 5,000 mark. Price came back into the support level. So this is the one I gave out yesterday. I was saying how price can tap into this support level because this is where it broke out the 5,000 mark, right? And this was my similar exact words. I don't know about word for word, but you watch my previous video. I was like, this not really a swing approach, but this is a good for intraday traders and scalpers because what you can do is obviously you don't want to go for any major move. You don't want to sit here and just buy right here and then expect to go all the way to 6,000 because anything can happen from here to here. That's a big move. But what you can do, you could have bought within this and target this high right here, and maybe even a little bit above that. Depends on what I want to go for. You know what I'm saying? Whether it's a 1-to-1, 2-to-1, 3-to-1, whatever you want to go for. But point is, you can see here, price tapped into it, clear as day. You can see it made a draw this out real quick. We had this low taken out. Price came up and made this clear. Fell low, so it took a low out, made a fell low, right, and then retest your entry right there. So and then obviously price took off towards the high. Obviously it was choppy and mixed of it, but you would have bought in right around this range. Stop off been below here. Why? Because price made this low, came up, breaking this low right here, making a lower low, and then obviously we had a fail low. Some people might look at this as a head and shoulder patterns. I don't really try to put names as it. I just keep it as structure. I just keep it as we made a swing low, price made a lower low, and then all of a sudden we made a fail low and broke this high. That's how I look at it. I don't try to name it as a head and shoulder pattern or a double bottom, double top. I just call it for what it is. This is what the structure is doing. It made a low, it made a lower low, and all of a sudden we made a fail low. When we made that fail low, it all of a sudden broke that, breaking this previous high, which is what we call a breaking structure, and then price retest off of that, and then boom. Simple as that. So instead of you just buying into this and having your stop loss way below here, now you can, as price tap into the support level, wait for the clear breaking structure, like how you see here, and then you buy off that, stop up below here, and then guess what? Target this high. You know what I'm saying? Or even higher, depends on what you want to go for. But point is, you get the point. You know what I'm saying? And the reason I say you want to do it like that because as price is at all-time highs, you want to get quick moves. You don't want to just go for unrealistic moves because price can drop at any point. I'm gonna tell you why I say that. They can drop hard at any point, but that's my little mini lesson for y'all. You know what I'm saying? It's funny because if y'all actually look at my my page, I give a lot of information on just market structure alone. Like I tell you, I don't never have to sit here and overthink price, what price gonna do, because I just let market structure tell me what it's gonna do. It's that simple. Once you understand the timing, once you understand candle behavior patterns and the timing of candle behavior patterns, so that's a whole nother ball game. But when you can understand that, structure get even more easier, and now you understand the timing of everything too. You know what I'm saying? So there's two ways how you can understand structure. You can look at structure from a overall market structure standpoint, but you also can look at structure from a candle behavior standpoint and timing. You know what I'm saying? So when you understand that, that's a whole nother level right there of understanding structure, and it becomes even more easier, But just my little lesson for y'all. I might highlight this. That was a good little mini little lesson. But other than that, gold, we overall bullish. You know what I'm saying? Obviously, again, it's just following structure. I'm showing y'all live. You know what I'm saying? Where's our next support level? We just keep following the structure. Our next support level is here. So guess what? So that means where will our next low be? That means this is our low. As long as price don't break below this zone now, we're still bullish. It doesn't matter even if price came down to here. As long as don't break below here, we're still bullish. But overall, our next support level will be here. It's the same concept. You wait for price to dip back down into this support level. I'm gonna delete this because this don't even matter no more. I will still keep this because it's still like the last down candle of the up move. No, actually, I will mark. Actually, I'm gonna update that too. The new last down candle of the up move will be here. So people probably wondering, well, why do I mark this right here? So behind every breaking structure, there's always a deeper level. If y'all ever pay attention, behind every breaking structure, if you look at it, always a last down candle before the up move of that breaking structure. Just like this. Before this right here, of this breaking structure, this was the last down candle before the price broke out. Same here. Before price broke out this breaking structure, it was the last down candle before price broke out. So that's like a error that I would put a block at as an error for price to come back into as well, because sometimes price don't come into this zone, it come into these zones too. So I like to mark both as an overall zone to look at. It is more bigger than usual because of this block right here, but yeah. So, but point is, actually, I'm gonna just put it here. Actually, it's just too huge. Last down candle before the price broke out of. But yeah. So with that being said, right. So this be our next overall support level. So what that look like is price retracing back down into this zone, right? And again, you just go through the 5 minute or 1 minute, whatever you're comfortable with, and as it tap into this level, wait for that clear breaking structure, like I show y'all, and then boom, you just target this high again. It's that simple. Get out of it. Again, we're not gonna just try to buy in here and hold it and expect it to go all the way to here. And I mean, if someone do that, you might get lucky. It might just go all the way to 6,000. Who knows? But I know this. That's a lot can happen from here to here. Price can push up a little bit here and then drop back down. You just never know. So when it's like this, I just wait for it to retrace down, catch that, and then catch back to the high. Boom, reset, do it all over again until you can catch every single bit. Now it'll be different if you were swinging it. Like it'll be different if you would have barred in like, let's say if you'd have barred in like way down here and you caught in right here or even lower, you know what I'm saying? And you just, you know, you're just trailing it at this point, then that's totally different. You know what I'm saying? In that case, yeah, you could hold it and just keep trailing it and just keep trailing it until you finally get stopped out. You know, just give me a little, you know, few gems. Other than that, but we definitely bullish on gold constantly. DXY, DXY is bearish. We did close bearish on the previous day. I'm gonna be very quick on this. You can see our price constantly pushing down. So we did close bearish on DXY. So let's see. So it did took out that low. So it finally took out that low. So we're gonna see how it responds after the low gets taken out. But other than that, we're still bearish until something else changes. We're bearish on DXY. On UJ as well. We're definitely bearish on UJ as well too. So you can see how UJ just made a huge drop on UJ, you know. So other than that, I don't want to make this video too long. So just make sure you follow, you know, for, you know, especially if you get a lot of value in my content, make sure you like. If you have any pair with me to break down, drop it in the comments below. As well as, you know, and continue just this, you know, stay disciplined. Don't allow your emotions to get the best of you when taking your trades. You know, have proper risk management. Make sure you know what you're risking before you even enter in on your trade. You should not be entering a trade if you don't know what you're risking. And also, you also shouldn't be entering a trade unless you know where your trade step is no longer valid. So them like 3 main rules: control your emotions, have proper risk management. Don't enter in a trade if you don't know what your risk reward is, and don't enter in a trade until you know where your setup is no longer valid. So your stop loss, when it comes down to putting your stop loss at, right, you're putting your stop loss where the trade is no longer valid, where your trade setup is no longer valid. Once you know that, then you can determine what your risk is and your reward is. So other than that, that's how you should be doing it. And then from there, it's just really just controlling your emotions. You can control your emotion a whole lot better when you know what you already is planning. You know what I'm saying? I'm getting a lot of free gems. So yeah, this a good series right here. But yeah, other than that, I will see y'all on the next market breakdown, and make sure y'all have a good, happy trading week. Peace.